I'll happily listen in.
Hey, Jared, how's it going?
Hey everybody. Sorry I'm a few minutes late. It's kind of crazy traffic here and in Florida. Whenever it rains, people lose their minds, and so I was a little bit behind this morning, but happy to be here.
Yeah, no, not at all. And happy to have you. We were just kind of recapping some of the projects we've had on this week. I'd say this has been the most blue chips, or one of the weeks we've had the most blue chips on. So, a couple spaces with Binance to begin and end the week. We had Avalanche on. We have SushiSwap on. So this to name a few, Everrise and other projects, Brave. But Jared, I want to bring things back and talk about SushiSwap. Good afternoon, Whale Coin Talk community. My name is Noah. I'm here today, excuse me, with Jared Gray, who's the head chef at SushiSwap. And Jared, before we get started talking about sushi, let's get a bit into your origin story, your career trajectory, and kind of work you've done, and then how you ended up at SushiSwap as the head chef.
Sure. Yeah. I got into crypto, I guess about 7 years ago now, and got in kind of just through a friend of mine that is started his career out at Microsoft. He's actually still there. He's a research scientist, and we went to school together, and told me about, Bitcoin back probably, I don't know, 2012 or 13. I didn't have any time to pay attention to it around that time. And so it was a couple years after that initial introduction that I ended up getting into it. But before that, I went to school for computer engineering and had a small stint at Dell while I was in school. And then when I got out and moved to Florida, I started a consulting company for computer engineering and like IT consulting. And I did that for about 16 years until I got into crypto through my friend's recommendation. And I got into it kind of just doing technical contributions to white papers, and also doing like some community management. At the time, it was like, you were on bitcointalk.org, that was where the activity was happening for Bitcoin and altcoins and stuff like that. And I just started getting involved and contributing and networking. And I, let's see, 2018, I had taken over the CEO role of an altcoin project that had a roadmap item that they wanted to basically launch a centralized exchange. And so I raised some money for that, launched that exchange. It took a little bit because there was some inner turmoil with the team and one of the founding members, and we launched that exchange in 2019 or 20. I can't even remember anymore. The time in crypto it seems like it's an accelerated timeline. So everything happened so much faster, but ran that for a year and a half, closer maybe to 2 years. And then just kind of fell in love with DeFi as everything was happening, in the DeFi explosion and in the DeFi summer, and pivoted the roadmap for that project, and ended up, around February or March of this year, just kind of looking for another opportunity. And then in July, the head chef role came up, and somebody I had worked with who's at Coin Bureau, I think in their head of research now, who I had worked with in the past on that exchange product, had reached out to me and said that Sushi was looking for a new head chef / CEO, and I should throw my hat in the ring. So it's pretty much how it happened. I just kind of jumped into the mix, and I think maybe at one time there was close to 20 candidates, and it was a pretty public process where you had to write like a a proposal and do community AMAs, and then you had like, I think we had 2 or 3 debates, as like the candidates were whittled down, and then at the end you had a snapshot vote, and whoever had the most votes over quorum is who they chose as the head chef. And I was lucky enough to get the role and jump into the mix, and really having a great time. And the team's great. I think Sushi's, had quite a bit of drama to work through over the years, at least for the last year and a half. And I feel like the people who are here now are really committed to making the thing a success. And I guess that's the full story. Now here we are. Hopefully we've had the bottom in the market, and we're seeing a resurgence of the economy on a macro scale, and crypto should be a favorable place to be, I think, over the next 18 to 24 months. I'm not an economist, I'm just a builder, so I'll leave that to you guys.
Yeah, I mean, that makes two of us. I am by no means an economist, a builder, and whether or not we've bottomed, I'm focused on building. So let's talk really quick about SushiSwap at a high level for people that are just getting into the industry and don't know the history of the protocol. What is SushiSwap, right? How does it work, and then how does it compare to other decentralized exchanges?
Sure. Yeah, that's a great place to start, I think. So yeah, Sushi is an AMM DEX, and it was the first spin-off when Uniswap launched. So they're, historically the inventor of this model. And, as a DEX, as a decentralized exchange, you don't have to custody your funds with a centralized operator. So you remove that trust factor out of the process. And I think as we've seen over the last year, and it's not just FTX, right? I mean, through the entire advent of in history of crypto, I mean, you've had centralized exchanges blow up kind of one after another, whether it's through greed or, malfeasance or technical ineptitude or something, right? Like if you go back and you look at Mt. Gox, that's the first one that, arguably had an opportunity with the fallout to kind of kill crypto. And I think it speaks to the resiliency of the utility of what we're building, that it didn't, and that it's blossomed into this huge industry and just continues to grow. But yeah, Sushi is a decentralized exchange where people can come interact with their Web3 wallet, trade assets with counterparties directly through the AMM pools, and they can remain the custodian of their funds. And it's permissionless. You don't have to ask anyone's permission to come and interact with the protocol. And this is pretty much the philosophical thesis of crypto, right? Like, you should be able to self-custody, have financial sovereignty and autonomy, and be able to interact with your counterparty in a trustless manner. So yeah, that's what Sushi is at a high level, and maybe even a philosophical level.
Yeah, and when Sushi first came out, I remember there was like vampire mining. Can you give us some like a high level history into kind of what that was and how that allowed Sushi at the time to distinguish itself and even capture some of the liquidity from Uniswap, which had the first movers advantage?
Yeah, the vampire attack, the infamous or famous vampire attack. I guess whichever side of the aisle you're on, you're gonna view it one way or another. But it was the first kind of at scale vampire attack of liquidity from protocol to protocol. And Uniswap came out. They had a really innovative approach to decentralized exchanges and how to serve counterparties. And Sushi was the first to fork and clone that, but how do you attract people to come from the first mover over to your competing product, right? So kind of in an ingenious setup, the original anonymous founder or core dev or however whatever you want to call him, Chef Nomi, put together these incentives, right, for liquidity providers to come over, deposit their assets in Sushi's pools and mine the token and earn incentives that at the time were greater than what Uniswap was offering. And so it attracted, I believe the number was over $1 billion in liquidity from Uniswap to Sushi, and kind of catapulted Sushi into, a strong, I think it was 23% of the market share of DEX exchanges. So, almost a quarter of the market share from Uniswap in that vampire attack, that liquidity mining vampire attack. Sushi's had some challenges with management turnover and staying technologically innovative since then. But, like I was saying earlier on the start of this call or spaces, is pretty much where the team and myself were focused, getting the exchange up to feature parity with our competitors, innovating in areas where we have a strong skill set and the resources to execute, and putting a roadmap together that can help us retain that market share we have, and then 10x from where we are now over the next 12 to 24 months.
I recall SushiSwap being quite aggressive in their rollout to other chains, whereas Uniswap kind of stayed on Ethereum for the most part. Can you give us insight? And I don't believe that you were around at that point, but can you give us some insight as to why they were so aggressive with the kind of multi-chain compatibility, and whether that has, in hindsight, been the right decision?
Yeah, I wasn't around. I came on October 2nd of last year after the whole head chef search concluded. So, but I guess I should kind of back up a little bit and say that, when I was running the centralized exchange, we were one of the first dozen wallets that was liquidity mining Sushi when it first came up. So like, I've been involved with Sushi since its inception. And we were mining the token back then, for a trading pair up on the exchange. But so yeah, I've been following it, through its inception till now, even though not an active part of or an active party in the community at all times. And from my understanding, the goal with the multi-chain first approach, and then it's turned now into, a heavy focus on cross-chain, was just to be aggressive at capturing market share, and what the development team thought was the future of DeFi, right? Multi-chain world, interconnected. DeFi is purpose-built to be composable. Protocols should be able to build on top of other protocols, and we call them money Legos, right? So like, you want to be able to stack these things on top of each other, which is, the term is composability. And yeah, you can really only do that, in my opinion, if you're serving users in the ecosystems where they're located, right? And as more networks come out and compete for market share and offer different technical solutions to the problems that some networks have. I mean, you see like Arbitrum and other layer 2s that are building to serve Ethereum scalability, and some that are focusing on privacy-centric feature sets. You want to be able to interconnect those things. So it makes sense that Sushi would think of itself in a multi-chain fashion, and then now thinking about, okay, how do we connect all of those chains so that liquidity isn't fractured And you know, that's been the advent. Solving that problem was kind of the advent of layer 0. You've got Axler, you've got MultiCoin, you've got some of these, you know, cross-chain messaging protocols and bridges that are trying to connect that liquidity and make the UX more seamless. And yeah, that's been the focus for Sushi. And I think also Sushi was, you know, as a community DEX, and the focus with that was to make anybody a contributor, right? So like you had a treasury at one point that was nearly $500 million with Sushi, and people could come and put proposals up on the forum, and they still can, right? But at the time in the explosion of DeFi, people would come and they'd make proposals, request a grant, and then they could build, you know, horizontally across the product offering. Like we had a lending platform called Kashi, a launchpad called Miso. Yeah, and so, you know, the horizontal product offering kind of approach coupled with the multi-chain approach, and now the cross-chain is kind of, Sushi's focus historically has been on trying to offer solutions in the verticals where I think the community and the core team feel that the industry is headed.
And when I use the drop-down menu, the network drop-down menu, you can see almost 20 networks are compatible currently with SushiSwap, or rather SushiSwap is compatible with over 20 networks. And certainly the goal, as you mentioned, is to now work on interoperability between the chains using the DEX. How close are you guys to that vision? And what I mean by that is, let's say you have a bunch of AVAX tokens on the C chain and you want to swap them for a bunch of Matic tokens on Polygon. How far into the development of a cross-chain, fully compatible cross-chain DEX are you guys, and when do you see that going live?
Yeah, that's a great question. So I think that there's two parts to that question, or two answers to that question. So like the first part is that we already have a product live. It's been live for maybe 10 months. I'm sure someone can correct me if I'm wrong, but I believe it's 10 months. And it's called XSwap or CrossSwap. And one of the things we're working on right now with our design team is making that user experience so that people know that product is available and how they can leverage it the most on the front end. But I'm not sure if you're on the site still, but the tab that says XSwap, if you click on that, you can actually cross-chain bridge any assets from those chains that are served by our backend infrastructure provider. You know, and again, we've partnered with Layer 0, working on a full integration with Axler, and then MultiChain. So we want to basically aggregate all of the cross-chain messaging protocols and bridges into our front end, so that into that cross-swap product, so that anybody can, you know, go from any network to another network. We want to become the main liquidity hub for each one of those chains as well, where people, you know, are going to do traditional swaps. And so we've been building out the aggregation router. It's actually just come out of audit. And so you'll be able to get price routes cross-chain. If you're an LP provider on Sushi, you'll be able to get biased routes where the prices for our aggregation are best served by Sushi LPs. And so there's quite a lot that we're building. I gave a kind of high-level overview of most of these features and where we're going with our roadmap, and like a vision doc that I linked on my Twitter, I think a couple weeks ago. If anyone's interested in reading it in more detail.
So the XSwap, or the X SushiSwap, is live, and I'm looking here. You're right. You're able to, at least conceptually, trade between, not conceptually, you are able to trade between a wide array of assets on one chain. and a wide array of assets on the other. What is the slippage on average? And I know it really varies from pair to pair, but is the liquidity across chains deep enough where people can justify using this XSushi mechanism rather than going to like a centralized exchange or finding a way to bridge funds over where they're not getting hit with such high slippage?
Yeah, off the top of my head, I wouldn't be able to give you an average depth from one network to another network. Obviously, it is going to change between assets as well. But I would say that as DeFi continues to improve and these protocols that power these features continue to iterate through, their improvements with, V1, V2, V3, whatever naming scheme they're using, those concerns become less and less. And yeah, I think very quickly these types of solutions and DeFi in general is moving closer to feature parity with centralized exchange and centralized solutions providers, whether it's an exchange, whether it's a wallet, etc. And a lot of this just comes down to like, a couple of things. Liquidity. You want to get good prices. You don't want to be slipped out and, have a 10 or 15%, price variable. And you need to be able to use it easily. You can download, for instance, you can download the Coinbase wallet or app rather. And it's very seamless. It's a Web 2 experience. You enter your email, you set up an account, you don't have to worry about anything, and you're up and running like with the UX flow of, like your Chase or Bank of America account, right? And so people are very familiar with that. The issue with Web3 wallets is that UX is kind of scary for regular people, right? They download this MetaMask wallet, and they got to download or interact with the browser-based or the mobile browser-based version of these protocols, which most aren't even optimized for. Then they've got to enter in seed phrases, and they've got to accept 3 or 4 different, clicking, button clicking flows, and it just becomes very problematic. Like the technical proficiency barrier to entry becomes problematic. I think, honestly, in my opinion, that's one of the biggest remaining barriers to this technology getting wider adoption. And quite a few teams are working on that. So I would expect over the next like 1 to 2 years, you'll see that improve both the liquidity, right? So the slippage in pricing has that feature parity with those centralized exchange operators, but then also that the user flows and experiences on these Web3 and DeFi protocols matches their Web2 counterparts. And you'll see people just kind of start to adopt it more, like in their daily usage. It'll become more ubiquitous with like, oh, okay, I just have my Web3 wallet and I click this button and but now I'm using it. I think we get kind of lost as an industry on trying to figure out like, okay, how do we convince people to use this product? You just make it easy, right? You just make it valuable, make it easy, and then people adopt it.
Yeah, I sound like a broken record at this point, but I continually saying that the future of Web3 mass adoption is when everyday people are interfacing with it the way they interface with Web2. So, and I think that once that happens, we will start to see a big shift towards decentralized applications and decentralized ecosystems away from centralized ecosystems. And now I do still believe that centralized entities will have their niche, whether it's people wanting the peace of mind of having someone to call if something goes wrong, or whether you have high volume traders that want to make like hundreds of transactions a day. I still think that centralized exchanges have that advantage there. And even fiat to crypto gateways. So that leads me to my next question. I noticed here that you guys have, and I think here it's third-party transact that allows people to buy crypto with with cash, with Visa, Cash App, or Gmail. Does this allow them to buy crypto directly into their decentralized non-custodial wallet?
Yes, and I would say that we've recently, well, it's been a couple of months in the works now, but we recently completed the development and integration of a new product it's like a fiat aggregator. And so instead of just having a provider like Transact, you'll have whoever gives you the best price from a selection of, I think it's about 16 total providers, with another half a dozen or so slated for integration. But yeah, you'll be able to put in your asset, the amount you want to pay. It'll route to the best liquidity source for that, whether or not it's like Mercuro or MoonPay or Transact, and then the user gets the best pricing there, and then they execute through the KYC flow. They get the assets deposited directly in their Web3 wallet, and then they can trade directly on Sushi from that Web3 wallet. So that
Jared,
you should be able to integrate it within the next 2 to 4 weeks.
Yeah, and I think that's just going to be one more catalyst that helps people or allows people to transition from centralized to decentralized. So very cool. I mean, I'm sure it comes with its own problems, but I wanted to focus on the good, and I think there's more good. It's a net positive rather than a net negative. Jared, some interface questions, some UI questions. Under the Earn tab, for example, it lets me sort the liquidity pools by TVL, but it actually doesn't let me sort them by APR. And I feel like a lot of users would want to sort the list of liquidity pools by APR because they want to see what's giving the highest yields. Any reason behind not having that integrated?
No, that's a great suggestion. It's an item that is in queue to be included in the front end. We're kind of a lean team of engineering, and versus like Uniswap or someone like that. I think they have 100+ employees. We have like a team of 12 core members with maybe 7 or 8 contractors. Yeah, that are full-time contractors, but not part of the core team. And so, our roadmap includes like the heaviest ROI items, like the DEX aggregation thing. And so I'm fairly sure that I've seen that request. It either came in through like through GitHub or someone else through the Discord, and it was added to the to-do list. But yeah, I agree. All these little improvements make it easier for people to navigate and find what they need to find, and just makes it a better experience overall.
And these APRs are being paid out in the Sushi token, if I'm not mistaken. Aside from, I guess, liquidity pool rewards, how long is Sushi's liquidity mining program planned on, or excuse me, how long is Sushi's liquidity mining program expected to last?
So it's actually a combination of I mean, it depends, right? If it's it depends. It's usually a combination of the native token for the pool and like boosted liquidity rewards or liquidity mining rewards or incentives from the Sushi token or of the Sushi token. I think we're at 246.5 million of our 250 million token supply cap in distribution. So there's about 3.5 million tokens left to distribute in that supply. And one of the things that we've been, or that I worked on kind of very concertedly when I came on was, okay, well, if you're running out of the supply to incentivize these types of rewards that the market is kind of historically expected. How do you, you know, continue to offer that if you're near the full distribution of those rewards supply? And is there a better way? And if the better way is something that needs to happen over time, how do you bridge between the current expectation and that better solution that you might need, I don't know, 6-12 months or something to get to, right? And so we put together a new tokenomics proposal that we made available, I want to say the end of December, beginning of January. And that's been out in the, in the public, circulating. People have been giving feedback on it and whatnot. But we modeled out a scenario where we're able to balance a target of about 250 million as the total supply by buying and burning tokens through various mechanisms. And it's an interesting read. I actually would encourage anybody to go to the Sushi forums and read it. That might also be on my Twitter if anyone wants to read it. You can check it out there. But yeah, and then long term, how do you keep the demand for these rewards down so that you're not constantly diluting token holders with new supply, right? Like how do you incentivize people without massively diluting other people, right? That's the real challenge here, because distribution of tokens in many ways are a bootstrapping mechanism for some type of behavior or outcome that you need within your protocol. For a DEX, right, you need to bootstrap liquidity, so you offer incentives for people to come, and then there's some type of value, right, whether it's governance or rev share or some other type of utility within the token that makes it desirable for people to actually want to provide their liquidity on your exchange to earn those rewards. So like how do you solve that kind of post bootstrapping effect, right? And I think that we have done that. We've been excuse me, we've been for the last 3 months, 2.5 months, working with network partners that are interested in giving them equitable share of the fees in like a rev share program where they more deeply align their ecosystems with Sushi as their like preferred partner DEX, right? Because without giving too much away, 9 out of 10 token launches of new token launches happen on Uniswap, right? So if you can capture 1 or 2 of those points, right, you can significantly increase the DEX's market share. And so my focus was, how do we align the long-term value proposition of the DEX post rewards bootstrapping mechanism or period, make it more of a community-owned DEX so that there's ownership by not just token holders, but by networks that want to integrate and have a place with a strong brand that has significant market distribution for people to come trade. And this is kind of what we arrived at. Well, let's make networks like we made token holders, owners. Let's make these network partners holders as well, just not on the token side, but on the revenue side of things. So as the revenue scales, and hopefully we capture more of those token launches that are happening alongside or within their developer ecosystems, we're able to position Sushi in a way that makes it highly sought after from the developer ecosystems and the networks we integrate, as well as those communities and our own community of current and future token holders. And so that's how we're thinking about market share, how to increase market share in our approach.
And is the main utility right now for the Sushi token governance, and also, I suppose, adding liquidity to LPs?
Yeah, right now there were some historical issues to overcome when I came on. The Treasury was pretty severely depleted. We had runway for
Tell us about. Sorry to interrupt you, Jared, but tell us about
Sure.
that. Go into that. I'd be curious to know. I read a lot of news about that, and would love to know what was actually going on with the Treasury being depleted, why it was depleted, and kind of what you did to start building it back up again.
Right. Yeah, it's just again, I've been in crypto for the better half of a decade, so I've been through a few cycles, and I've seen the same mistakes just kind of happen over and over and over again. A new project comes up, they have a massive treasury, but it's denominated almost entirely, or in some cases completely, like 100% denominated in the native token, right? And there's no hedging or diversification of that asset to maintain a USD value, right? And there's a lot that goes into thinking about the value of treasury. Like if you pay out, for instance, if you pay out your contributors in your native token and they don't hold it for more than a year and they convert it to fiat, well, in most Western jurisdictions, and I'm pretty sure like in Europe as well, that triggers a capital gains event, right? Like tax event. And so like if you're paying someone $100,000 a year to be a developer and they have to pay whatever it is, 35% in capital gains, that sucks, right? So like what you should be doing as you manage these is keeping enough, managing these treasuries is keeping enough of your native token that you can incentivize people to want to participate and contribute for the token, but that there also is the liquidity to pay like core team member salaries for significant amounts of time of runway so that you don't go out of business, right? And in like 2016, 17 era, you had like the Bitcoin altcoin craze. Like people were forking Bitcoin and they were saying, oh, Bitcoin Diamond, Bitcoin this, Bitcoin whatever, right? And, even altcoin projects like Pivx and whatnot, which I don't know if anybody knows who these are, but if you've been around for a while, you probably heard these names. But they had pre-mines, right? Which was a percentage of their total supply that was designated for the treasury. But many of these projects didn't diversify out into stable coins or into fiat, and they rode the wave up. They had maybe 50 million or whatever the amount, right, of their pre-mine, but they never captured it, any of it, or a substantial amount of it, and many of these projects went under. And that's kind of that happened a lot in DeFi as well, and Sushi wasn't immune to that because for whatever reason, whether it was FOMO or people just didn't think that we would enter such an aggressive bear market. Sushi's management, right, didn't plan for that downtrend in USD price of the token. So you went from a Sushi Treasury USD value of about $500 million down to 20 million, 15 million. It's not all because of that, but it's mainly because of that. And if you had diversified out as management, which is a challenge in and of itself because you're a DAO and you have to send all this stuff through governance, and maybe you get front ran, etc. There's a whole like litany of challenges to overcome to do this stuff correctly, but you have to at some point to make sure that you're not totally exposed to that volatility. And that's really what caused the issue. So when I came in, it was, okay, what does Sushi have of value? Because as a strong brand, it's cash flow positive, but it's directing all of the cash flow that it's capturing with this strong market, fully market distributed brand, to token holders. Okay, well, typically companies pay these, they pay out these dividends, if you want to call them that, in the traditional world to holders when they're making money, when they're making a surplus of money, and they conserve cash when that surplus goes away. And so, you just have to look at it objectively and be pragmatic and say, like, if you don't do these things and take this only real cash flow that the business has and use it to boost or to harden the treasury and get value back into the treasury, you're not going to be in business. So that's what I did. I came in and I said, look, so to the community, you've got a couple of options. Here are the options. This is what you need to do. And it was contentious because, things become almost an expectation. There's an entitlement to certain expectations. And you have to reset that and recalibrate it and give the reality of the situation. But, when I came on, oh man, what is it, like maybe $12-15 million in total treasury value, which was about a year and a half in runway. And just in the 120 days I've been on, we're at 6.5 years of runway. And that's not denominated completely in the Sushi treasury token, right? So we're on a very strong path, and just in that 3.5 months, we're able to do quite a lot. But it was contentious.
Oh man, when you threw those numbers out, I respectfully I cringed, because that's a big drop. I think you said 500 bill and 20 mil, and then at one point 12 mil. So I think that the silver lining here to you guys is most companies or entities that experience that dramatic of a drop in treasury value probably not going to make it. But you guys are still around, you're still building, and there's still a lot of opportunity in this space. It's still, I mean, as cliche as it sounds, and as much as people might disagree, I can make arguments why it's still early. Yeah, so Jared, what are sorry, I got a little distracted by those numbers. What are some of the strategies that you are implementing now to build the treasury up and build it up in a conservative way, while also making sure that you're not missing any upside going into the market, or going into a potential bull market in the next like 2 to 3 years?
Yeah, all these are great questions. So I may have, just as I was like firing off numbers, I hope I didn't misspeak and say 500 billion. It was actually 500 million, 500 million. So it's a 90%.
I misspoke. I'm sorry about that.
No, it's fine. I just didn't want. I mean, 500 million to 20 million is a significant. I didn't want to misspeak and tell people the wrong number. So yeah, it was 500 million down to about 20 million. And not all of that, right, was native token loss. There were some investments and stuff made in partners and whatnot that I think could have been done in a better manner. That's just kind of probably a differing management opinion between me and like previous head chefs. But yeah, what we're doing now, so we passed the CAMPI, right, which is the proposal that originally was called CAMPI, like bear market protection, and it was to take 10% of revenues from trade volume, right, and put it into the treasury. So my proposal really was just extending that for a period of time, which was 12 months or until new tokenomics come in to the fray, to direct 100% of the 0.05% of the taker fee that we have on Sushi, right? So like LPs still earn the same amount. We've just redirected that 0.05% to the treasury instead of the Sushi bar. So those annualized returns at current volumes like 7.5 million, and our burn rate is about 5.2 million. So my goal with that was to not have to spend any of the native token treasury this year. Give us a full 12 months to build the protocol, get it to feature parity, execute on these BD plans with like the rev share model with the network partners, build a strong base while not stressing about getting everyone paid, and we have enough resources to operate for like 3 years without Campi, but liquid without having to sell off the treasury token assets. It was about 1.5 years. So like we've added another year to that just with Campi alone. We've reclaimed nearly another 15 to 20 million in assets that were in USD value of assets that were floating out there in the ether that basically needed to be recalled and reclaimed. Those are either back in the treasury or coming back into treasury. And then we, on the BD side of things, have deals that are netting us another several million back to the treasury this year. Like those deals pretty much close and the value is captured immediately. So through that, with all of the assets that we have in place with Campi, with the reclaimed assets, with the treasury or with the token price where it is now, between $1 and $1.50, we're at about 6 years of runway. So my goal is to keep like 2.5 years of liquid runway as a base, so you don't have to keep going back to governance and trying to ask for treasury to pay people's salaries, and you can operate, build a business, execute on your business plans, and really position Sushi back to where it was historically, right? Which was like neck and neck with Uniswap. And so that's my goal. And then I think over time, as the market is realizing that, and we'll see the kind of the fruits of this execution, they'll be able to go, okay, well, okay, we want buy-in, we want to be part of this journey, and so I think there's a lot of values that can be created there, and that's how I'm thinking about the future of Sushi.
Well, look, at this point, you guys are OGs in the industry, at least as far as I'm concerned, and it sounds like you have kind of revamped the strategy and you're on the right path. And I just looking through the protocol right now, it does look like a lot of the innovations and the rollouts that you had planned are starting to go live. Really quick question. I'm going to pass the mic to some audience members that we're going to ask questions, but really quick question. I recall that in the past you could only stake Sushi on Ethereum. Has that been changed? Are you able to stake Sushi on other chains now? Just like single staking?
The goal with the new tokenomics is to completely overhaul our chef's contracts infrastructure so that you'll have like cross-chain staking and stuff like that. There was a proposal that Sarang, our lead contract developer, put up June of last year, sometime last year, that was XX Sushi, which was cross-chain sushi, so that you can have that type of utility. So it's in the roadmap, but yeah, it requires a pretty significant overhaul of our current token contracts and staking contracts. So we're taking it not slow, but we're being like methodical in the process to make sure that we cover all the bases with what we put out. It's a little different for us because like, people come in, I think sometimes, and they're like, well, why don't you guys do this right now? Or why don't you do that right now? It's a little bit more difficult when you're a larger protocol or company and you don't have a fiduciary duty to your holders the way you would like a Coinbase or a traditional company, right, where you're custodying funds. But you have to make sure that you cover all of the bases, right? You don't want to just build something and throw it out there that might get exploited. So you have to look at areas where you can be innovative, but also maintain a level of like responsibility when you put it out under your brand, that you don't expose your users to any unnecessary risk. So
Yeah, no doubt. That I mean, I agree, and I think that one of the things that people in crypto don't realize is that despite things moving really fast, protocols and robust code and all that still takes a long time to build and get right. I think one of the reasons you see so many exploits is because stuff like that's rushed so often.
For sure.
Go ahead.
Oh, sorry. No, go ahead. I'm sorry.
No, Jared, go ahead. I get your thought in. I was just going to call on a couple audience members after.
Okay, I swear I'll keep this one short, sweet. I was just going to say I agree with you. Good software development takes time. Again, I did this stuff for almost 16 years. I did a lot of work with like the DoD, NASA, National Oceanic Atmospheric Administration, a lot of government contracting. And you remove the red tape from that kind of process and just the software development or hardware architecture process, it takes time. The average contract there is around 8 months. I had one contract from the time I won it to the time it was completed was almost 4 years. So these things, like the expectation in crypto is like kind of FOMO driven in a lot of ways. And so you have to mitigate that, right? You have to set expectations correctly and make sure you're not taking too long, but not exposing people to risk or undue risk.
Mm-hmm. Yep. No, I completely agree. Aisha, you had a question. Go for it.
Yeah, no, thank you so much. Okay, I was wondering, is SushiSwap also offering impermanent loss protection for the LP pools similar to ThorSwap?
Yeah, that's a really good question. I think that that we've been in chats with partners for the last couple of months to try and find what solution makes the most sense for SushiSwap LPs. We've talked to Dopex. They have a really great impermanent loss hedging options-based product. I think the challenge there is these options vaults and products. They have their own challenges with having sufficient liquidity to offer it at scale. And so, I don't know the exchange that you mentioned in terms of the impermanent loss solution that they offer, but it would be interesting to look at because if it has sufficient liquidity to offer it at scale, it could be something. That's kind of the beauty of the space is that it's global. It's open source in most instances, and so people are building nonstop, and it's kind of impossible to know everything that's going on. So I'm always open for people to tag me and stuff on Twitter or send me DMs, but I would like to have a look at that one.
Understood. Okay, I have read in a news article that SushiSwap has established 3 DAOs in Panama and Cayman. The DAO Foundation, Panamanian Foundation, and Panamanian Corporation for Business Restructuring. Can you explain the function of these 3 DAOs and how are these 3 DAOs restructuring the infrastructure of SushiSwap?
Wow, that's an awesome question. So yeah, the challenge of operating like a global crypto business in DeFi is that you really have to keep things modular and distributed. So the approach that we took with the DAO was under the direction of a very prominent legal team. It's worked with a lot of the biggest protocols and exchanges in the world. And this is the approach that they've kind of white gloved. It's separated out in terms of the front end, the protocol level, and different products and stuff like that. Each one is kind of where it's best suited for each jurisdiction is separated into those legal entities. And additionally, something you probably haven't read about yet because it's not out, is the structure we're going to take for the Sushi Studios products, which is another initiative I had to try and compartmentalize the horizontal product offering risk to the main Sushi DAO treasury, right? How do we offer new products without stressing the main treasury out? And how do we do that in a compliant manner where some of these products might have limitations in certain jurisdictions? So like All the stuff is set up to be distributed to take into account compliance and regulations for certain jurisdictions, and to be as autonomous as it can be in kind of the global setting that is the reality for business, whether it's crypto or, you know, any business really.
Got it. Thank you. Thank you so much for answering my questions.
Sure. You're welcome.
Venice, you're up next.
Yeah, thank you so much, Noah. Actually, I have a question regarding SushiSwap limit orders. So, are there any specific times or market conditions where limit orders tend to perform better or worse in SushiSwap?
Well, one of the things we're doing, I'm probably going to somewhat indirectly answer your question, or maybe not totally, because I don't have that data in front of me. But I would say that one area that we're focusing to improve the product stack right now focuses on a more performant version of the limit orders that have been available on Sushi for a year and a half. And so you can expect to see that improvement and kind of a version 2, or whatever version it's on now. Maybe it's 2, maybe it's 3 of limit orders coming in the year for Sushi and his product stack. But I would defer that specific question to Sarang, who is the lead contract developer and kind of the architect of that limit order system. And he's on Twitter if you like.
Yeah, I understood that. And one more thing, I also want to know if it is possible that limit orders be executed automatically on SushiSwap for NFT trading. So, is it possible with SushiSwap to trade NFT automatically?
We don't have that functionality built into the front end, but it is something that we've talked about quite a lot, and something we would like to offer. It's a little, how can I answer this? So we have an NFT marketplace that we've recently released the live beta for, called Show You, right? And it was incubated for about 18 months by Sushi. And that is a feature that we obviously want to have optimized and available for Sushi users and Show You users, because we obviously want Show You to be a success so that we can leverage the Sushi brand in the NFT marketplace arena. So I would say that the way it currently exists will improve, and you will see it likely more heavily used as Show You goes to mainnet, and you know, there's a heavy push there for the NFT marketplace.
Yeah, I completely agree with you, and thank you so much for answering my all questions.
Sure, you're welcome. And again, if you have like highly technical questions or specifics that you can't find in the docs on Sushi Docs, feel free to join the Discord and tag Sarang. He loves to talk about this stuff.
Yeah, let's go. Excuse me. Let's go with Doug next. Doug Hype. I think he might still be connecting.
Is it my,
Yeah, maybe Doug's having some issues. Rahmat, go for it, man, while we wait for Doug to connect.
Yeah, thank you, Noah. Okay, so I've read in a blog section that SushiSwap has made the tough decision to sunset 2 of its product. For now, Kashi, which is I think lending program, and the Miso token launch. But you also touched these 2 products in the beginning. So I was wondering, were these 2 not generating any revenue for the SushiSwap, and will you be considering maybe revamping them in the future, or they are not in your plans anymore?
Yeah, you know, honestly, these are some of the best questions I've ever had, Noah, on a Twitter Spaces. So it's actually, yeah, thanks to everybody for these. Yes, we've deprecated them. For now, most likely. No, they didn't make any money in terms of like traditional cash flow or revenue streams. with Kashi, there was the opportunity for it to grab market share and maybe profit from fees from liquidations and stuff like that. It was never a product that got enough focus because the core team just didn't have the capacity. And so we took it out of the scope of products for now so that we could focus on getting feature parity with the DEX and build up the DEX business, because the DEX business industry is highly competitive, and it's somewhat languished at Sushi until recently, maybe July of last year. And so just pouring all of our efforts and resources into that. And then Miso, having a decentralized permissionless launch pad for people to do token launches, I believe, it was profitable, but there are regulatory concerns there that I don't want to expose the DAO to. And so sunsetting it after speaking with our legal team was kind of the most apropos way forward for it. I would say that Kashi is probably a product that would see a revamp because there's a direct integration into the product vertical within the DEX. So probably we don't have a timeline or an ETA for version 2 of Kashi, and then Miso is a whole nother challenge that I don't really have a timeline or answer for whether we would reintroduce it into the market.
Understood. Okay. SushiSwap is also sponsoring WalkMe, which is a JavaScript library for Web3 front ends, which I think provides intuitive TypeScript interfaces for developers to interact with Ethereum. So it got me thinking that how is Sushi benefiting from this sponsorship?
WAGME is directly integrated into our stack, and so the grant was I think the first grant, and this is before my time as head chef, so I might be a little hazy on the details, but my understanding is that the team wanted to leverage, WAGME's libraries, make it part of the stack, and initially sponsored or was one of the co-sponsors of WAGME with a grant. So this recent grant was kind of a renewal of that commitment to, extend kind of official sponsoring with a purpose kind of driven grant renewed to WAGME. But yeah, they're part of our stack and they do great work. I know that our engineering team really likes the responsiveness of their team, like the professionalism, and then also, they're just heavy grinders in terms of developers. So it's a really synergistic alignment with our goals and our stack.
Got it. Thank you so much for explaining. Thank you so much. Over to you, Noah.
Thanks, Rahmat. Excuse me. I have to keep clearing my throat. Doug, you keep DCing, brother. I'm not sure what's going on. DMF, I got you too, man. But you guys both have DC'd. I think DMF, go for it, and then I'll get to Doug after.
You know that there's going to be a fork of Ethereum Pulse chain, and since already Uniswap and OneInt's already confirmed that they're going to be on it also. Are you going to move also, or move your protocol towards Pulse chain?
Oh, we haven't even discussed that yet in our engineering roadmap. I think, it makes sense to be where the people are. And so if the people are on Pulse chain, we would make sure to do due diligence on any chain, whether it's Pulse or another, meet the development team, and see, kind of what the community wants. But we haven't talked about it specifically in our engineering discussions yet. We're pretty much fully focused on the aggregation side of our business that even before I came on the team, the sushi team had been focused on building an aggregation router in stealth mode, which just came out of audit in mid January, and so we're kind of setting up the product stack in the front end to support that and optimizing with all of our resources for that business. You know, our goal is to be able to bias again routes in that aggregation business to sushi LPs without sacrificing, you know, optimal pricing for the user, and make the LPing experience on sushi more attractive so that we can capture more TVL.
The Hex community is the one that actually creator of Hex, the first credit deposit, the credit deposit protocol on Ethereum or in crypto, was the one that actually pushed Uniswap over the edge and to take over the market because of their protocols of DeFi, and also because Ethereum was not providing the right fees for this type of protocol. They decided, Richard Hart, the creator of Hex, decided to just concentrate himself on creating the fork of Ethereum. By the way, that everybody that has any ERC20 will receive the ERC20 that he has on Ethereum to in Pulse. Your wallet is going to be exactly the same. You just need to change the network. And an important move is that an important point of this is that it's going to be the biggest airdrop in crypto history. So I'm not showing, but I want everybody to pay attention to that, because the fork is about to happen in a few weeks.
I don't want to sidetrack away from. I don't want to get off topic. I appreciate
about
you
lending protocols. About lending protocols. You should.
I really don't want to get sidetracked. I understand that you're not trying to shill, but I really want the topic and the focus, or rather the focus of the conversation, to be on SushiSwap.
Yeah, no problem.
So,
I mean, again, you know, like people are passionate about certain projects, and I mean, that's great. It's what helps move our industry forward. I think, to answer the gentleman's question, it's not something that we've discussed. I don't have any personal feelings towards any one protocol or another. You know, we're here to serve users wherever they are, and if the community wants us to include chains or networks, you know, any one of those will go through the same due diligence process that you know, we have in place. That is how we maintain responsibility within the core team to our community and crypto in general, right? It's not just the users in our Discord and on Twitter. Like anybody and anyone, you know, anyone anywhere in the world can use these protocols. So yeah, I hope that answers his question, and I'll look into it. So
Thank you.
Thank you, DMF, Rahmat, Venice, Aisha. We got one last community member, Doug, D-Hype, on the mic, and then we can wrap things up.
Thanks so much, Noah. Can you hear me?
Yeah, loud and clear.
Okay, great. Hey, Jared, thanks for coming to the show. I really appreciate your sentiment and your optimism towards Web3 in general, and your objectivity in support of everything in Web3. I'm curious, maybe you mentioned this earlier, but I was kind of like having some technical issues. But are you still planning on releasing the public dashboard and for the DAO and Treasury activity for Uniswap? I'm sorry, for SushiSwap.
yes, actually, that I just got out of a meeting yesterday about that. You know, I want to make sure that what we're putting out there is what people want to see, and so we've made some versions of it available to the community, and then from those versions we've just been iterating on improving it. But my goal is to have the governance dashboard with the features that I promoted, and that also that we've gotten feedback from the community that they'd like to see released by the end of this quarter. So that's my personal goal. It's not an official date or anything that we've set out, but that's where I'm pushing the team to what timeline I'd like to execute. You know, it might even come out sooner, but yeah, for sure. I think that's a much needed tool of transparency and accountability, and I'd like to see Sushi set a standard where it can be a leader. And I think that, you know, that's a great place for us to start.
That's really cool, and I think that just the overall sentiment of Web3 for the general populace, this could be really beneficial because we want to probably see examples of where decentralization and objectivity can really show the power of Web3. And now that we've had this history of, you know, other kinds of exchanges have some bad press and stuff, I'm a big fan of trying to get some good press for Web3 and then show, you know, the positivity and the things that we can get done to the rest of the world.
Yeah, I mean, kind of, it's interesting because it's, you know, people may label that as like, it's a sentiment I share, but people may label that as being like kind of corny or philosophical. But it's like, you know, I'm a lifelong libertarian, and however you feel about political labels, that's mine. And so like I got into crypto as an extension of like how I feel philosophically about the tech and economic freedom and opportunity for people. And for me, being at Sushi is an opportunity at scale to help promote that ethos, right? Which is, I think, in the first couple of paragraphs of the Bitcoin white paper, right? And that's kind of the gold. It is the gold standard of crypto of how we should be operating, in my opinion, because it came out of a need for these principles to be espoused and propagated globally, because traditionally they've been, you know, kind of managed by cartels in a form, right? And the framework for financial, like global financial infrastructure is sometimes, or maybe even in many instances, is used as warfare against people, and that drives me absolutely crazy. It should, like, opportunities should be everywhere for everyone, and philosophically, I agree with you completely. And that's what drives me on that side of the building in this industry.
I think I really am looking forward to seeing more from you and maybe coming back to shows like this to update on what's going on with SushiSwap, because it sounds like there's a lot of change happening and we're kind of just like all figuring this out together, right? But I appreciate you being so transparent.
Of course, and I love to hear feedback and criticisms and of where we can improve. So feel free to join the Discord. Again, tag me on Twitter. Love to get real-time feedback.
Thanks, Doug. And Jared, thank you again for coming on today. It's been a pleasure. If there's anything that we haven't asked about SushiSwap that you're interested in sharing, or anything that excites you on the upcoming roadmap, go ahead and tell us now. Otherwise, hope you have a great weekend.
I appreciate the opportunity. Trying to do more of these in 2023. So anytime you feel I can add value, I'm happy to entertain it. And then I guess kind of the parting piece of news that I would share with everyone listening is that, you know, we have a very large partnership, an ambitious roadmap item that we'll be announcing at ETH Denver in detail on how that will hopefully bring a lot of value to the SushiSwap ecosystem. There was a little bit of it leaked at Quantum in Miami, where I spoke a couple weeks ago, or last week. I can't even keep track of the time anymore. But yeah, it's, I think, really quite an exciting time to be building in crypto. Have a lot of eyeballs on the technology now. I agree with, I think it was Doug who just asked the last question, but there's an opportunity for us to just like focus on the positives, push out technology and solutions for people to use to enrich their lives, and focus less on the hype and the FOMO, which they'll always be there, right? Like it's a that's a level of excitement that I don't think ever goes away. I mean, the traditional stock market still has it. So yeah, thanks for having me, and hope to chat soon.
Yeah, thanks for coming on, Jared. You're always welcome back. Would love to hear you come on and talk about updates and innovations that you guys are putting out over the next year or two. So we're always here. And Whalecoin Talk community, first of all, thank you to the community members that came up, every single one of you that asked awesome questions. It really brings a lot of value and an extra layer of education to the space, but also the broader Whalecoin Talk community. I see a lot of you guys in the audience that are always jumping on our spaces. We really appreciate it. If you like the content we're putting out, do give us a follow, Jared a follow as well. Particularly Jared, he's taken SushiSwap on a different path, a brighter path from what I've gathered, and I think they're going to do a lot of great things going forward. Also, remember, everything you hear on these broadcasts is meant for educational purposes only. Nothing should be taken as financial advice, so be safe out there. My name is Noah, signing out. Take care.